Mr. Crypto Sniper, why you no love me? Not hear from you long time. Yes, I know. So here's the thing, how it rolls, gentlemen. First of all, I need you to subscribe and like and share. Please do that right now. Go on. Right down there below. While you're doing that, I'll explain to you something. When things are not particularly active or high probability, there is nothing to be done. Low activity levels on YouTube in terms of traders, usually it's a benign environment where there are not great high probability opportunities. And that is where we have been since my last YouTube. In fact, my last YouTube had the title, where is it? Go, sniper, go. Sub 10,000K in it. I think I ended up posting it to the wrong channel. I've been totally dyslexic. No, I didn't. Bitcoin to go below 10,000K. Where is it? Does it say it? I mean, is he lying? I remember writing it. One of these. Anyway, the key point is I only said 10,000K. I didn't say 6,000K. The amazing thing about the guys market commentating on crypto is that they always want to outdo each other, and it's a pissing contest. That's going to go to 50,000. 100,000. I say 1 million. Just give me a few extra 18 months. And then when it's going down, we've got to calamitize. It's going to 3. It's going to 6. It's going to everything. Sometimes it's just about seeing the visibility just beyond that of your hand and seeing what you can get and not trying to throw out the biggest number. And that clip said 10K, sub 10K when we were around about here. And this has been the key level that we're redipping down through, but it's important. I'm going to make it clear about this dip. That's why I only said 10K to be run again to the downside, because it's not an absolute capitulation of immense enthusiasm or fear, should I rather say, for capitulations. This is structurally where it's been. It's been a bit foxy. I was really doing great up to here. We'd done the good longs. We'd done a little bit of a short. I was at big all-time highs. And then I started to get it a little bit wrong, and that's because it was in a consolidation. And the minute you have 3 losses in a row, you drop your size straight away. After one, certainly by the third, you should be about half, if not a quarter of the size, until you find form again. Because what they're actually doing, losses is a feedback mechanism, and most of you ignore it. And you go back into the same market and you attempt to do the same thing again, expecting a different outcome. And what it actually means is we didn't have HVF setups, apart from that little boyki over there, which we took a nice blow off high on, and we've done really, really nicely on. And then it was all about wanting to be in the game. Plus I traveled. So here's a couple of stuff ups that I did that you should learn from. But because I was at all-time highs, I didn't want to stop trading. Yay, great idea. But throw in a bit of jet lag, throw in a bit of two-legged cross-continent, cross-ocean to another part of the planet, hotels, motels, holiday inns. Say what? Who remembers that song? Anyway, I digress. And guess what? You do damage. You do damage to your account. So you take some of that cream off that you've earned. Why? You failed to capitalize the cream and consolidate it as real capital. You think it's froth money, fun money, play money that you've made. Those same pounds buy the same amount as your hard capital initial amount. This is called casino effect. You go in with your $500, you know you got $500, you go up to 2.5 grand, you think I've got my 500 and I got 2K of their money. And then you play like a wild thing with the 2K and you promptly lose it. And then you start thinking, you'll use that 500 again to nibble it back up to 2K, because you've done it once, you're surely going to do it again, and you blow the 500. But you have that watermark in your mind where some money is froth money and some money is real hard foundation money. And that's a fake concept that you need to dispel. I tend not to have that problem so much anymore, but I was at all-time highs and I was more prepared to trade. And normally my rule is I don't trade if I'm traveling. I don't trade if the market is not giving me clean HVFs, but I stayed in thinking it's going to go a little bit longs, a little bit shorts, and I ended up shorting near the bottom, you're longing near the local high, and you're getting a bit fastidious. You're trying to do other business, which we're doing very successfully, but you get distracted and you do damage. So just take a lesson from me. Even when you're deep into your trading career, it's quite easy to get compulsive and want to be continually in the game. So it's good. I call it your success tax, to take real money. This was my hot account, and I was doing BitMEX is my hottest of hot accounts, where I take outlier risks as well. So it had really gone up quite a bit, and you tend to think it's fast and furious. The best thing is when you've had really big gains is you're about to have your big loss mistake. Whenever you're at an all-time high, you almost want to submit to a wealth tax where you take it out of your hot account, you tax it into cold storage somewhere else. A little bit of advice. Anyway, let's talk the cryptos. Here I am ranting. I haven't spoken to you in a while, and then I'm giving you lessons on the way of the world and not talking the markets. Okay, so what is the situation with Bitcoin? Here it is, major basing out. So we had that nice little wind up, it popped, it then fizzled a bit, had a descending grind line. So that was showing that there was dip buying. It had a sell-off, hit the line, rallied, had a sell-off, then the buying came in, marginally lower lows, then it has a bump, making the first higher high, fails to make a new low, you start to get bottoming, you get really low volatility with mainly drift up, then you get a nice push up, you make the new high, you run the round number of 9,000. I haven't put all the round numbers in, it would be totally crowded chart. I'm putting the gray line there now, 9,000. So you tip tap toe at the 9,000, you got to wind up. Why? Because the big number is waiting. The big number that takes it to 5 digit is waiting. And how do you break a big number? Guess what? You break it. You either just run it and pull back hard and need to wind up to hold it, or you break it with absolute momentum. You never just casually drift through it in a low volatility manner. You either pop a nose through it, get spanked and return hard, or you break it with momentum. Broken with momentum, more momentum now. It's hype, headlines, moonshot of real parabolic pace that took you up to your 13.7. Then you get your first slap in the face. That was a falling wedge, came down to here. What do? You re-dip and test the 10K level of support. You dip through it because you don't bounce exactly on the 10K. A whole bunch of orders get triggered. They can't all get filled in 10K in a selling environment. It runs through 10K. You get the snapback rally. You get another wind up. You make a new high, but it fails to make a higher high. Is it a continuation pattern? It starts coming down. You think you're going to get in nice and cheap here for a continuation pattern. It bounces, it stays just above there. You want to start shorting because you think it's going to run here. What do? You get a snapback rally, you get shaken out of your shorts, and then it does run there. You then say, damn, it's doing what I thought anyway, I'll chase it and get short. You get short there and you get another snapback rally. What you end up getting is either, and I've done it in red, a bull flag with a fat channel. So you need to view this flag the way I've drawn it, maybe on the daily time frame, and let's pull it through for you. Pull it through, show the lads what they want to see. There you go, the red, trimming the wicks along the lows. I've done it on the daily because then it makes sense why those lines are there. When I drop that time frame, you'll see that I'm truncating candles. This was drawn on the daily time frame, and you potentially have a very fat channeled bull flag drift off. So we're letting off some steam, but the people were buying the dips that came sub 10. Look at that snapback hammer. Then it broke the 10 with momentum. Yes. But then it snaps straight away back. People chase in, they want to go short. Boom, the dip buying gives them a whiplash. Terrible markets to trade because you don't know whether you're getting a flag, you don't know what you're getting. I've also done in blue. Ignore the 10,000 horizontal, also in blue. In fact, I'll make him pink, pretty in the pink. Pink used to be a male color, by the way, long time ago, before it was stolen from us. Anyway, back to facts. The blue was a falling wedge. You'll see it better on the 4 hourly, but I'm just showing you where that hammer, the flag comes from on the daily. Trimming the wicks. Will we ever revisit up top here? We tested a lot along the lows because it's been more about correcting. So we've been leaning a bit on the lows. We're in a midpoint. I always truncate my patterns to see the midpoint. I want to know where the ground floor, the basement is, and the first floor. Okay, taking it down into 4 hours. You'll learn so much more about how to look and draw your patterns in a full program. For that, click on come and get started with us, and you'll have a chat, no obligation, and you will talk to an HVF trader of at least 2, maybe 3 years standing trading the markets, and you can hear about his experience. He'll listen to all about what you've experienced and shared in the markets and where your pressure points have been, and he'll share his and we'll give you details. And it's free chat with another trader who loves what he does and wants to talk about trading. Go and do it, but only if you're serious. Anyway, so back into here. So now you can see the flag lines as they were. If it were a flag, and this is one scenario of a few, because I'm going to talk about the falling wedge scenario now. That would imply a flag move up, which could see us make another move back above 15,000. This is why we called sub 10, but we didn't go sub 9, sub 8, sub 7, because each sell-off got this quite a strong pushback rally. This was a long period of selling with very minor sell-offs, but there were still pushbacks. Long period of sell-off. So you drop from 13 2s, 13 4s to 10 9s. Back up above into 11 8s. You pick up $1,900 odd. Big sell off there. You run your 10K again down to the 9/8. Then you get a minor snapback. This has been leaning. Sellers get exhausted. They take you right down to 9/1 snapback. Similar level of resistance should be noted that. So here's our midpoint in the flag, which is the red line there and the red line there. I can extend this and make this a bit fatter now. You saw where the target was, roughly to the 15,000. That will give you an idea of what we're talking about. But you can see this is not an easy market to trade, and therefore you shouldn't do it. Because all that happens is you give your hard-earned in the clear-cut moves back for being engaged. Compulsion is your greatest danger. It's not that you always blow your stop losses. Maybe you stick to them. But the fact is, if you take 5, 6, 7 in a row where you're in a market that you shouldn't actually be trading, apart from if you had been really smart and caught a short early in this stage and held it all the way, this was not an easy market to trade. And I don't like going short in what is a macro bull. So my opinion is still a macro bull. Hey, to those guys who write in the comments to my videos, oh, you don't really like cryptos. Oh, you're just a gold freak. No, guys, no. I don't believe in anything absolutely. I see the good, the bad in everything. I see the potential for control structure abuse. If you own the power grid and you get everyone in an electric form of money, guess what? You get them cornered. You get to say when they can move their money and not by taking it down, the mobile network, etc., etc. If something is physically yours, it's physically yours. It's just a fact. It's not a that is better and that is good. Bitcoin has gone up more. I've made tons of money in crypto. I'm very grateful for the crypto market. I do not have delusions necessarily about who might have created. I keep an open mind, and I suspect control structure everywhere. Why? Because they will not let you have your money. Anyway, back to the technicals. Just a quick retort to some of the comments I've been getting. So the low end of this, recognize this was done on the daily. That's why the bodies have dipped through the lows. Look at the blue lines now. Ignore the red lines. This could be the same blue line that was the red line, could be a base to a falling wedge. We could be midpointing it there. That's my midpoint for my falling wedge. You could have a trim top, a trim there, a trim all the way along. And now you're squeezing into this event now. That's why I'm telling you now, because I'm a good guy and I tell you when key moments come. That's why you subscribe and hit the bell so that you can be the first to hear it. So we had a mini or a micro, mini. Let's go with mini, not micro. Left shoulder, head, right shoulder, possibility there. Not a huge fan of the tiny fractals always over here. I didn't want to get engaged. I didn't short it. I'm glad I didn't. And reversals, again, I'm not in a hurry to trade short, even though this is a coming off market. It is not an inverted HVF. It's not a primary structure where you get an absolute throwdown. It's easy and it's emotional stable. This is a market that messes with your brain. And that's why less coverage, focusing on the precious metals, been doing better there, enjoying it. Make sure you do no damage. Do the things that keep giving you gains. Many times, particularly beginners and intermediates, you subsidize your losses and you keep hanging on to them, hoping they'll come good and kill good running profits. It's exactly the wrong thing to do. Why? Because you don't want to acknowledge a loss. A small loss is always better than a big loss. If you're wrong, close it. Get used to doing that and taking small losses. It doesn't hurt near as much. And rarely do you go deep into losses and it comes back and it moons and you're the hero. Rarely. If your timing's wrong, you're doing something wrong, get out, it's all wrong. When you're doing something right, stay with it, but don't get too greedy, and remember, all things will pass. Falling wedge, blue triangle, we're bumping up against it. Here we bump, there we bump. Use the pen, Francis. Show the guys you've got the tools. We invest in tools. I sound like the Fed. We have many tools for hitting Control P. We can either hit Control P, or we can swap hands and go P, Control. You see? The creativeness of the Federal Reserve. I just love him. Anyway, so touch over here. This is a grind line, we call it. You'll learn the relevance of them. That is showing that there is a problem. Typically, you do not bottom like this. What does he mean when he's saying that? He means there's a chance that you might go up, try get 10 one more time. You won't go maybe as high as here because you got resisted there and resisted there. So that's not a good line. Take the bad line away. Whoops, get the rubber, please. Take the bad line away. Go away, bad line. Stick it on here. So, yep, we're bouncing on the ground. Then you get another weak little rally, really low volatility, maybe gets a nose over 10, and then you could get a spit down out of that. Or we break even sooner and we visit the bottom edge of our wedge before squeezing and then getting an upside break. So at some point, depending how we'll play out, if this wedge draw is right, it would be option B there, option B. Oh, that's not a good B. You guys won't be able to make that out. Option A is you actually creep out the side and we end up redrawing it slightly and it then fizzles, which would be a problem. But overall, the volatility is reducing in this. That tells me the vicious selling that saw that falling wedge, which had two legs of selling in it, there and there, because there was the snapback rally, and the selling here, which had much smaller snapbacks. The sellers were dominant here. You went all the way from there to there. That large S of real bearish intent no longer is out there, but it could be winding up to say goodbye for the 10, and you could get part of this kind of a move to the bearish downside. So we could go there. But because we're in the wedge, because the buyers came in there when it dropped sub 10 and they were ready to come in when it was approaching 9, remember 9 over here where we did that little wind up before we ran for 10, could mean that we could have a dip and a test for 9 and sub 9. So if we went here and we broke, we could go sub 9. So now we might be ready to consider that. But if we get, once again, the troops come rallying and buying the dips, this tells you that there's money on the sidelines that's still ready to buy the lows. So this is not a capitulation with absence of bid. There might be short-term absence of bid in a leg like that and a leg like that, or thin bid, or a period like that as you ran the 10. But overall, the market quickly regroups and comes in, and there's a new bid stack that's forming at the lower levels. And this is what we're seeing. So this is not bottoming. I am short-term calling for more lows. Overall, however, this entire structure is not a big ass aggressive reset for me so far. It could change. If we get a far bigger leg than we've ever had before on the bear side and it turns into an absolute beast, then it was a moderated sell-off. There were bid buyers coming in on the lows. This is normally intelligent, deep-pocketed money that values its entry points. That's not dumb money. That's not FOMO money. They're buying against the trend on the basis that it represents a good entry point for them. That's patient money. So typically, you don't see it suddenly disappear. In other words, they've got a long line, they're ready to accumulate, they're in no hurry, and they buy per price, and if it comes out a little bit level, that's why you get these marginally lower lows. If the next one is lower, but it is only marginally lower, in other words, that's the descent there, and this is a softer descent from here to there, you start to create what's called the rounded bottom. You get a half pipe or a quarter pipe for you skater boys. I know I'm an old bastard in this game now, so I've got to keep it youthful. Skater boy quarter pipe, and eventually you end up with a full-blown half pipe. And I ain't talking about the hubbly-bubbly type that some of you like to get up to either. Okay, so that's kind of Bitcoin. So short-term, suspect softness and a dip further, and letting go of the 10K for a reasonable amount that could see you run lower than that. So that means 9s could be broken and you could have an 8 in front of it. But once again, I wouldn't wet the bed and go, and you're going to 6, 5, 4, 3, it's all over. No, I don't think that's at all, because this just doesn't so far indicate that was it. Unless a whole new level of frighteners come in. There's regulation that's being announced. We're going to regulate crypto more. That bloke who's called Munchkin. I call him Munchkin. Can't get my head around the spelling of his name. It's enough to provoke my autism, that minutia. Anyway, but anyway, he's talking about regulation. And guess what? The market's going, yeah, it's done this. It's not dying. So it's short-term bearish, But overall, the macro reaction is not outside the realms of just a minor letting off, minor bloodletting. You know, you got a little nick, you got a blood nose in this skirmish. Okay, you didn't get beaten the whole sod up. You didn't take the baseball bat to your head. You aren't concussed and in the intensive care. You know what I mean? So it's kind of like that. So a little bit more, then we'll see. That doesn't mean it can't set up another inverted or a bigger structure pattern that then could see us dip right the way down to the structural levels. And then I'll be saying 6 in a moment. Given what we've got now for the visibility that I can see in front of me now, that is the forecast. People need to understand. When I say forecast, I mean scenario cost. It is my primary bias scenario, but many others exist. Okay, so there you